the push towards domestic tourism in this appeal to avoid foreign travel, in the next 1 year. Of course, what is the kind of impact that will see on some of, the domestic operators, and listed operators in India, if you can help us understand that. And also the work from home appeal. Here we have seen, big organizations setting up expansive offices in many of the cities around the country. And then now suddenly, what do you do with that kind of infrastructure?
Yeah, see, this is momentary. We have analyzed several wars. Of course, if you go back to the latest war, which is still continuing, the Ukraine and the Russia war, of course, crude prices went seriously higher. Of course, this time around, we were almost at the low of crude prices, $58, $60 a barrel. I'm speaking about Brent near-month futures, which shot up to almost 126 momentarily. Now, closing basis was 190, 120. So what I personally think is in this full year, the crude oil prices will last at $85 average, or at least the median will be at 85, if not the mean. That's point one. So whatever this appeal is a momentary. So if there is infrastructure, like Bangalore has so many offices, commercial spaces, REITs are coming up, and there is a lot of commercial development which is happening. Will that go down the drain? The answer is no, this is going to be momentary. But now the debate could be, is it 2 months or 6 months or 4 months or 8 months? The crude oil prices have to be coming down. Crude is not such a rare material. The problem is of OPEC having controlled supply. So I think it will find its own dynamics, and I don't think it will get there. Second, I think on the gold bit, I think gold is the place where I think all of us can contribute, and meaningfully so. If you look at the kind of gold Indian households have, that is almost 30 times what RBI's reserves is. We have 2 lakh crores, 200 lakh crores, that is 2 crores of Indian rupees in gold as a household. If you measure it in tons, it is 27,000 tons. We are speaking about $50 to $70 billion of inflow. That's not too much. That's about maybe 5-7% or little 3% of the total household gold I have. So if I'm to let go of all my 3% purchase, then the gold import is zero for this year. And I saved myself $50-70 billion. And it's especially at this price of 4,700 and at this dollar price, would I want to buy gold? It is a mathematically right thing to do. When gold was $1,700, $1,800, it's one of the oldest assets in the entire history of humanity who reached $1,800. And something happens and suddenly you go to $4,700. And in the SIP numbers or the ETF numbers have just come today, there is 3,300 crores of more ETF which has come in. January, people bought 24,000 crores of gold at $5,600. And that has lost 16-17% of M2M. So mathematically, from an asset allocation standpoint, buying an asset which has inflated to 1,800 in thousands of years and to 3,000 more rupees, to 3,000 more dollars in a year and a quarter, you're better off staying away from it. And if that is just 2-3% of what you currently own, if you were under-owning it, I understand. Gold in households, Indian households, is 5 times that of Indian equity mutual fund. The equity mutual fund is 48 lakh crore and gold is 2 crores. So I think that's the most sensible appeal. And I think we should stop buying gold. Of course, like Sir said, today we are not buying gold in the form of jewelry. It's the most efficient from an import standpoint. And there's a lot of paper gold which can, sovereign gold bonds have stopped. Of course, government lost a lot of money. If they came back, then replacing this $50-70 billion is going to be reasonably easy. And I don't discourage people to buy jewelry. That's a consumption item, and enjoy the money you've accumulated.
Feroze, Aziz and Subankar Sen, thanks again for joining us and giving your inputs on the appeal made by Prime Minister Narendra Modi over the weekend.